All right, what up, people? Had another morning session of choppy price action. I only ended up taking one trade today, and I get into that in a minute. It was only for a scalp, but looking at the broader picture today, you see on the daily chart we have this nice, solid, bullish candle forming right now at the moment. Well, let me see how we responded to this. All right, so you can see I put this line here to show where the daily 9 EMA, kind of give a representation of where it would be. So you can see once we broke it, we kind of hung around, retested that area, and finally, we bounced off of it really nice, and we've been climbing bullish ever since. So as far as since the price action since the market opened today from the bell, we were really, let me bring up to the right one, because this is showing the contract for the next upcoming contract. All right, so you can see we were chopping around a little bit, and I recognized the price action. Once I recognized that we were going to be choppy again, at least in the first couple of hours, I was just sitting back and watching, trying to wait for a good setup and volatility to open up, in a certain direction before I took a trade, which never really happened. We had a nice little bullish climb, but it was really choppy, so it was hard to trade. I ended up not taking any live trades today because the strategy that I use over there is it would have at best got a couple of scalps, and I know this because I ended up paper trading over there once. I didn't really like the price action to trade with my real money, so I just switched over to the paper trading platform, and at best I only got a couple scalps. Actually, I only ended up being aggressive in that paper trade mode. I only ended up like in the green about $25. So that with all that was through several trades, so that would have basically been with the commissions like break even. So I didn't miss out on anything over there. Towards the end of this video, like, I could have been more profitable. I mean, there's a way to actually trade this. The best way to trade this towards you stick to the end of this video, and I will go over the best way to kind of trade this this kind of price action, which really the best way to trade, period. But all right, so getting into the trades that I took today in TS Trader. I only took one trade on the Russell for a little scalp, and it was a manual exit. The reason I saw this price, I saw we had a nice little another bullish flag here, and I got in at the pop of that flag, but because of the price action, I was seeing a lot of resistance to continue going higher, so I went ahead and I actually moved my stop right below where the 1 minute candle was at that time, and I ended up getting stopped out, and that ended up being a good place to exit there, because you see we had a nice little strong pullback before we had another climb higher. And like, once I got stopped out, I went to do some other things. I stepped away from my desk for a while, and when I came back, we were like in this candle here, so I could have been aggressive and got another entry here, but I missed it because I was away from my away from the computer, which is not really a big deal. The reason I missed this one too, because you see we had all of this, like this one in like the first 30 minutes or to an hour of the open, we had a lot of wicks going on right here, so I didn't like all the choppiness, the price action, so I decided not to take any trades here too, and I don't know exactly why I missed this one. This could have been a good trade as well, but that's the only trade that I took today in TS Trader, and as you can see, I only got $20 from that. So you know, pretty much a boring day today again for me. Um, other than the paper trades that I took, but paper trading is, is not as it's good to work on your your skills and everything. Um, if you're, I'm not. I feel like I don't, that I don't really have a need to paper trade anymore. So, the only reason I paper traded today was because of the price action, and I didn't think it would be good to trade my strategy with my live account today. It turned out being a good idea. So, but at the same time, it's kind of boring because I really don't feel the need to paper trade over there. It was only to quote unquote scratch the itch. So that's how my day went. Now to get to what I mentioned earlier, the right way to trade this kind of price action for NQ or really any country, any futures contract or any instrument, whether it's stocks or forex or futures or CFDs or whatever you're trading. Um, the correct way that I could have traded this today. The only reason I didn't trade it this way is because I didn't want to take the risk um, trading it that way because I'm working with a small account. So I want to build that small account up first before I start, taking more risk and trading this way. I only got a $400 cushion, so that it's not risking. It's not worth risking a whole $400 or everything that I've gained. Just what I'm saying, on one trade. You know, that's just that's just the way that's my mentality for right now. So anyway, so get into the way that the best way to trade price action like this, or any price action, it doesn't, whether you got a strong market or weak market or whatever, is to basically just use support and resistance. So once you determine a direction, so you can look. If I just remove all of the, let me go ahead and remove everything. I remove all of the indicators. You can't see the indicators. So you can see that if you just look at just the chart, you can see we have this bullish pattern. You can see we're trading bullish. If you start here, and that's not the right thing. You draw a trend line, and I'm just gonna put it. I'm not even gonna. I'm just gonna draw this line. This isn't based off the price, the candles at all. So you see we're kind of following the trend line that I drew, which shows that we are definitely, this is definitely a bullish pattern. So I mean, trend direction is really that easy to determine. So once you find out which direction that the market is trading in, then it's just a matter of, okay, where are you going to get in, and how are you going to exit the trade. So, and I found that the best way to do that is with support and resistance. So let's say right here when the market opened, I should have been. You can see we have some support here. That would have been the previous support. So I could have been looking for a buy the dip opportunity. Now it's easy to see this in hindsight. So, but once you build experience and everything, you can kind of see it a little bit better. And then that's where the moving averages and stuff kind of help you, until you gain the experience and the skill to be able to see it without the moving average. But it kind of helps you see why the price may bounce there or whatever. So you can see we're trading bullish, and also you can see from this 50 moving average that the moving average is moving bullish as well. So it also helps you determine what direction the price is trading in. So, and there's a lot of different ways to do it. Determine direction. You can use another chart. So let's say if I brought up a 10-minute chart, I can see I can see on the 10-minute chart the trend is bullish. So, and I go back to the 5-minute chart, and then I determine my entries and exits and all the stuff off of there. There's a ton of ways you can do it, but this is just the basic, at the core of how you would trade this. That's what I'm going to talk about right now. So seeing that we had that resistance, that support there, I just removed it. But you can even look at the 9 EMA. You can be, you can, if you can look for a place to get in at the 9 EMA, that's, a little more aggressive. Or then you can look at the 50 EMA and see that that the price was, had a lot of support there at the 50 EMA, and you can put your order here, and to get into the trade. You can do a stop order, to get in once it crosses that price. Or you can do so a lot of people they will do a limit order once they see it breaks that resistance there, and it pulls back, they get filled, they have their stop down in here, and just let it play out from there. And then now when you trade that way, the key thing is you have to have a plan to exit the trade. So you can do something as simple as, you get into the trade, you have your stop here. Let's go ahead and color that red, so to represent the stop. And you can just, let the trade work out. Wait for another pivot point, which is, where the market comes and turns around at. And you can see, like, okay, once you got this, you see this, the price kind of breaking down here, and then we get another bullish candle, and we start, moving, trading back bullish. Then you can go ahead and move your stop now to break even, or to lock in some profits there, just in case it turns around and and it starts trading in the other direction. At least you take away some profits. Depending on and all this depends on what your what your target is and all that good stuff. So the point of this is, even with really choppy price action, you can if you trade it this way, it's a little better than if you try to trade with really tight stops. And most of the time the market actually does trade this way. Right now, lately the market has been really hot, and we've had a lot of strong volatility and a lot of big moves in a short amount of time. So there's a lot of people who are finding some success in trading scalps, or getting in and out of trades because of how hot the market is. But once things come down again, really this is the way that you want to trade. You want to use support and resistance, and so you don't get stopped out of trades too soon before they make their move. Before it makes its move. Even if I got in right here and I trailed every 5-minute candle, you see I could have still took a good deal of profit there. So just from those 2 points, that's more than, goodness, just from those 2 points, that's more than $300 there. So I mean, there's a lot of different ways you can do it. You just got to figure out what's best for you. And if the only thing is, if I would have taken that trade there, then my risk would have, if I would have traded it this way, just say I would have took this trade here, then my risk is more than that's more than $500, which I'm not willing to risk $500 on one trade, right? And then you can do like a 2-to-1. So if you would have just placed the trade and just try to let it work out, you can see you would have had a 2-to-1. So you just got to figure out what you're willing to risk, and what your target is, and all that. You have to determine what's best for you, with your account size and with your experience and your comfort level and all that, to to determine how you're going to execute your strategy. So I just wanted to give that that little insight, from what I've seen when I was trading, before I decided to go ahead and call it a day, because I didn't feel like I was going to get another opportunity, even though now I'm looking. There's hindsight capital again. I could have taken a trade here, but the market is really choppy, so it is what it is. I can trade tomorrow. It's no big deal. I preserve my capital. That's the main goal of trading, because even if you make a ton of money, if you don't preserve your capital, you can lose it all in a short amount of time, and you can't trade anymore. And that's from personal experience. So I hope that helps. I actually want to start making more videos like this. So I hope you guys are out there trading well, and I will see you guys tomorrow for the pre-market insight.